So, hello everyone. Kalispera to everyone, to the wider investment community, to the Futex traders, anyone listening in. Uh, Going through my weekly trading roadmap for the week starting the 29th of June 2015, and it's looking like we're going to have a very, very eventful week up ahead. We've had some news developments over the weekend. Anyone that's in the markets, part of the markets, trading, investing, will already know by now what's happening. But I'm going to go through a rundown anyway, very quickly of what's happened and what we could be expecting ahead in this week. Obviously, we're partaking in some quite historic events, so um, like anything, we should be humbled by this and try and trade it accordingly. Don't let this get too much to your head, and try and trade it as professionally as possible. So let's get started and let's kick this off. To start off with, we did have over the weekend the PBOC cutting rates. It cut the one-year lending rate by 25 basis points to 4.85%. That's the fourth cut since November, and it lowered its reserve. Certain banks are required to hold by 50 basis points. So that's probably most likely due to the recent sharp correction we've seen in Chinese equities. We're seeing over the last 2 weeks, we've seen about 20% or odd correction in these Chinese equities. The Shanghai Composite specifically getting hammered recently, particularly due to brokerages tightening up their margin requirements, and that's weighed heavily on some of these stocks. For those of you who don't know, the Chinese market's pretty much predominantly um, driven by retail flows. The retail sector actually drives about 70 to 80% of the flow. It makes up 70 to 80% of the market actually. So that is a lot of the market movements right now you're seeing due to heavy speculation, and we've actually seen the PBOC now stepping in and taking a stance on that. Um, I mean, it's quite sad that the Central Bank of China has to step in to avoid these market moves rather than acting on economic indicators. But nevertheless, is what we're seeing, and we should be monitoring this, uh, week after week to see how this develops and if the Bank of China is going to be doing any more easing, uh, if the sell-off does continue and becomes even more sharp. Now, the major headline of the week, of this weekend, is basically that the Eurogroup talks on Saturday broke down completely. Um, and from this, we actually saw Alexis Tsipras, the Prime Minister of Greece, call for a referendum. So, Alexis Tsipras called for a referendum, and he's calling for that referendum to take place on Sunday, the 5th of July. So that's this coming Sunday. And basically, the people of Greece are going to be able to choose whether to go along with the creditors' proposals of continued austerity, or effectively default and leave the eurozone. So a yes means stay, and a no means Grexit, and that's what we have until now. It hasn't been a specific. Um, the referendum hasn't specifically been outlined what the question is going to be, but this is more or less the picture we're getting at the minute. Um, um, in my opinion, obviously I am quite biased. I'm Greek Cypriot, so in my opinion, I think that is quite courageous, and in some form or another, it seems like the last stance of you know um, democracy. It's obviously they do have to cover their asses, because if they did take a unilateral decision just to go along with what the creditors wanted, they'd be going completely against what they were voted to do as a government. So obviously they've put this forth towards the people. Some people are arguing that the people can't make decisions um, um, on such complex issues, but in the end, I think it's up to the people whether they want to go through that austerity for the next 5 to 10 years, or whether they want to, take one last shank to the gut, go back onto the drachma, and I think eventually that would be the better decision. That's obviously a personal opinion. The things at for the time being, um, things are looking quite dire. And what we've seen actually happen as a result of this, we saw the ECB today on Sunday, the 28th of June. ECB said that the ELA to the Greek banks will be maintained at the current level. So basically, the level they left it on Friday, and this is directly from the ECB website. I've seen a bunch of things come out on Twitter. Everyone's just kind of putting their own twist and their view on things. I like to personally just go directly to the source, and then make my own opinion on it. Um, so before I go through any of the other market views, I think it's best to just look at what the source is saying. And the ECB has basically said that they've taken a look at the decision of the Greek referendum, non-prolongation of the EU adjustment program, and basically they're going to maintain liquidity at the current level, um, which was Friday's, what they had it at Friday. So basically anything that's left the banking system over the weekend, whatever that number is, I'm sure it's a very, big number. I haven't looked at the stats, so it could be 3, 4, 5 billion. The banks are now short of that. And what we've seen as a result of this is that the Greek banks are now have a bank holiday on tomorrow, which is Monday, and they're also saying that this bank holiday is going to last for the next 7 days or 8 days. So they're looking at this lasting until Tuesday, I think that's the 7th of July. So they're looking for this bank closure to last until the 7th of July. So basically everyone in Greece won't really have any money up until that point, and when the banks do open on the 7th, they'll be able to pull out 60 euros a day maximum. So that's the capital controls that they have at the minute. Now, what was interesting from this press release, and I wanted to just view it because it seems like everyone's just stuck on what's happening right now in the markets and how bad this is and how everything's just going to go to shit and it's the end of the world. It just seems as if it's the end of the world at the minute. But I think in these moments of uncertainty and confusion, it's best to just look at what's going on in the world right now, understand that the situation we are in right now is not exactly the situation we were 5 years ago in 2010, where we were looking at a similar scenario where there was the possibility or a high probability of contagion. And what I would like to also say is that the ECB has already started QE. Now, back then we weren't even looking at such an option. And in this statement the ECB had in this press release, they actually said the Governing Council closely monitoring situation and the potential implications on their monetary policy stance. Now, it's just a line, and it's a very small line, but I think that could mean a lot in the weeks and possibly months ahead. Obviously, with the fact that we're getting all this news and this negativity out of Greece, this uncertainty, the ECB has a mandate, and their mandate is to, have price stability. Now, if this is going to threaten that price stability, there's no reason why the ECB might not step in and do even more QE, aggressive QE, something, far larger than what we're seeing right now. Now, in that respect, I'm also starting to see some of the reasoning why so many market participants seem to be fairly okay last week with just buying risk. It was fairly, I think, difficult for most traders in the office to understand, and a few techs understand why so many people are willing to go with so much risk on their books. Obviously, that alone is stupid. On Friday was stupid to buy so much risk coming into this weekend. Those people are going to pay. But the fact that we didn't unwind a lot of the move that we had since last week, it just goes to show the background. It almost seems as if even if there is something bad that's about to happen with Greece, it's almost as if the market's quite confident that the ECB has their back. That doesn't go to say we're not going to get a lot of violent and nasty moves to the downside next week and the weeks ahead. I'm just saying that there could be something there, something to just a caveat to be thinking about when coming in tomorrow and saying, all right, let's just sell everything. Something just to be aware of. Now, I want to look at a few of the market implications going in to tomorrow. And I'm taking most of my time on this roadmap, basically looking at this Greek thing, because it's going to drive market flows for the whole of next week, possibly the next month. if nothing's resolved. So it's important just to keep your eyes on this. I'm not looking at so much as some of the other market news events or event risk this week, apart from this at the minute. So I'm going to go through this a little bit more thoroughly. So the market implications. What we've seen is so far the market was assuming thus far that basically a deal would be worked out. And we saw the periphery trading higher in recent days up into this weekend. We saw the periphery trading higher. I think the Greek stock index was up like 10, 11% on the week. We saw yields, periphery spread yields were tightening. So the BTPs were actually relatively strong-ish compared to the bunds, which sold off quite heavily, Thursday, Friday especially, late into the day. Equities, very strong. Eurostock stacks, very, very strong in the week. Just gapping up and holding up at those higher price levels. So we're seeing the market, it's fairly, I think, prudent to assume that the market was actually pricing in a deal or some sort of deal. Now, I think looking forward after we've seen this move, I think it's also quite prudent to assume that in the near term, we're going to see peripheral yield spreads to the core fixed income markets. They should be expected to widen quite sharply. I think BTPs are definitely going to be underperforming your bunds, your gilts, and the US T-notes. Specifically, your bunds, I think the bunds could have a very sharp rally. And we'll go over some of the auctioning price levels and the market structure in just a little bit, but let's just go further into this. Like I was saying, the flight to safety with bunds being preferred product. Now, risk aversion, I think, is going to rise quite significantly in the near term. But now, something again, like a caveat, I wanted to put in there, just a little bit of a spanner in the works. With there being a limited banking system slash economic contagion on the cards, I think there's going to be a point at which investors are eventually going to buy this dip. Now, obviously, this is all to do with the price action. If it's not there and the flow is not there, you shouldn't be trying to buy it. This is going to be a flow-driven market, and I need to reiterate this about 10 times in this roadmap because it's really important for you guys to understand that. Now, and I say this, and this is especially if the ECB begins to bolster its rhetoric about potential implications. Now, like I was saying before, if it's, and I'm not assuming this is going to come out this week or the week after that, but in the near to medium term, if we're seeing the ECB, start to look at the situation and say, okay, this is getting a bit dire. We're seeing the markets reacting quite heavily, and they're not liking the situation. They think it's going to have a risk on their price stability mandate. I think it's a very high chance they're going to step in and say, we're willing to do more QE, we're willing to do more stimulus, we're willing to do what it takes to make sure that this doesn't get out of hand. And they've already opened up the floodgates, so there's nothing really holding them back at the minute. They could just increase it. So just be wary of that. Greece doesn't make, in a lot of these indices, it makes up less than 1%, if that, in some of these indices. So just, it's not really going to make such a big difference unless we get a black swan where one of these banks or a fund, goes bankrupt or something. If we get something like that, that's a completely different story. But until then, just be wary. Now, another thing to be wary of coming into this week. Now, they've been playing basically chicken. Greece and the Eurozone, the Eurogroup, Greece and the Troika, I should say, have been playing this game of chicken for about 5 years. And we've come, this situation's come to a head. It's come to a point where Greece has basically said, we're going to put this in the hands of the people. And with that, they've put an incredible amount of uncertainty. And obviously the markets, with all this uncertainty, it's going to get thin, it's going to get volatile, and there's going to be a lot of risk aversion. But since they've obviously pulled out this big card, and we've already seen the U.S., I think Secretary Liu came out of the U.S. and actually said he's calling on the Troika to give the Greeks debt relief. Basically, that he's telling the Troika, just fold, guys. This is ridiculous. You can't let this situation get out of hand. So if we see either of the sides fold, i.e., Greece says we're pulling out, we're not going to we're not going to do this referendum and we'll agree to your terms. I mean, if we get a really crazy reaction from the Greek people, um, and Tsipras just says, okay, we're not going to go along with this, the referendum, it's getting a bit too crazy for us to handle, and they fold and they say, okay, we'll go along with your terms. I would that on that basis, I think a comment like that would make risk assets rally aggressively. Or again, on the side of the troika, if they fold and say, okay, we'll agree to your proposals and we'll extend your bailout, give you debt relief, yada yada yada, I think that would give you um, a rally. Now, any other comment this week, you have to be really, really careful to trade because effectively, this has now gone down to the people. Uh, these comments really won't make a difference as long as this referendum is going through. And I know Christine Lagarde has already come out and said, whatever the referendum is, it doesn't really matter because the proposal won't really be on the table by then. I think the referendum is still quite important because the Greek people are going to vote on whether they want to stay in the Eurozone or not. Um, so it's down to them. And effectively, any comments that come out are going to be somewhat null and void. We could see some reactions, maybe 5, 10, 20 tick moves, but be careful. Just be really careful. You just don't know with this. I think um, if we're getting some aggressive sell-offs in these equity markets and you get some sort of, minorly positive comment that, blips the Euro stocks and DAX up 5, 10, 20 ticks, I think that's going to get sold into. Just be careful with these comments. You have to get something concrete. We're at a point where talks have broken down completely. We're looking at the ECB is no longer, I mean, Greeks are no longer cooperating with their Eurozone counterparts. It's a completely different situation. So I think you need something really solid, really concrete, really big to be tradable. Now, coming into today, coming into to Monday, obviously I don't really have many markets to show you as a bearing. Um, Obviously, just about 45 minutes ago, we saw the Euro USD spot market open up, and we saw a pretty large gap open, gap down to the downside. Um, and that's pretty much holding lower prices at the minute. But for the sake of just to show somewhat what a small sample of the market is kind of pricing in, I'm looking at the IG index Sunday market calls, which obviously is going to be largely affected by speculators, retail traders, whatever they may be. But just to give you guys a taste, we're looking at the FTSE 100 um, down 200 points. That's 3% down. We're looking at the DAX about, well, 500 points, a little over 500 points down, so 4.4% down. And the Dow, 287 points down, is 1.6% down from where it closed on Friday. So at the minute, it's looking like these headlines are taking quite a big toll, at least from the Sunday market calls on IG. It's looking like we're getting a pretty big move lower. Now, with that same logic in mind, if we're looking at, let's say, the Euro stocks, for example, we're looking at a market that could be opening up um, quite a bit lower. I mean, 4% is going to put us. I've got to look at the chart, but um, we'll take a look at the chart now and see. We'll calculate that just really quickly. But nonetheless, we're going to be opening up a lot lower in these equity markets, and the bunds are going to be opening up a lot higher. So how we trade this, we'll try and take a look at in a minute. But the first and foremost thing I wanted to say before we look at how these markets are structured is it's very important to understand that the market is going to be very thin, extremely volatile on both the buy and the sell side. This is not the day. Tomorrow, when you come in on Monday morning, is not the day to be marrying yourself to trades. It's not the day to be trading technical levels. This is probably not the week to be trading technical levels. If we're seeing high volatility, very thin markets, you need to be trading order flow. And this is where your price action skills are going to be put to the test. You're not here to be trading the technicals when the fundamentals and the flow is going to be driving the market. Just be really, really wary of looking at a level and saying that is an awesome level. I want to buy that with a 5, 6 tick stop, and the market just blips through it by 20, 30 ticks. Eventually does find a bit of support, but you just you just can't know how much risk you have to take on certain levels. Um, just be really, really wary. Trade the order flow. If you have an area you're looking at and the market goes through it, then pops back up, holds it, and then you see buying come in, then trade that order flow. Like, just make sure you're sticking with what the market's telling you, and don't just look at a candlestick chart and say, okay, that looks like a good area to buy or sell. I'm going to get stuck in there. Um, and we'll take a look at our risk and management, money management plan at the end of this roadmap, just to see how we're going to just maneuver ourselves this week. So before I go through some of the data points and the central bank speakers and all that good stuff that we usually do go through in a roadmap, I'm going to go look at the market structures of the Euro stocks and the Bund. And it's pretty much the only two markets I'm going to be showing you in any depth, because I'm not going to go through any other markets in that much depth, because these are the two markets that I'm trading. And it's a little bit selfish, but if I go through too many markets and look at too many things, it could be quite difficult to trade. I personally feel whatever market you want to trade this week, make sure it's one or two markets. Keep up, let's say one or two markets you're going to look at as a barometer, and then trade those one or two markets that you know well inside and out. Don't go delving into too many crazy markets. Trade the markets you understand and keep it as simple as possible. There's going to be so much going on, so much confusion. Keep it simple. With anything, if you trade an event-driven risk over an ECB or an FOMC, it's important that you trade a market you understand, and you have to be trading with a very, very simple plan, because if there's too much to take in, a lot to digest, you can't be thinking on the spot, looking at 5, 6, 7 different markets. Just look at a few and look at them well. Okay, so I'm just going to go through, start off with the Euro stocks. Now, given where we closed on Friday, now just to put into the context, last week we opened up, this is the opening on Monday of last week. We opened up with a gap between 35.06 and 34.96. So this is the gap. This is the fundamental gap we had coming into last week, where the market believed that there was going to be some sort of deal, and we rallied significantly. We had a technical gap on Tuesday, filled in that gap on Wednesday, traded around that and filled it in. We placed our VPOC basically for the week is somewhere in this region here, and we've closed at the price of 36.18, just in there. The real important level we were looking at last week was 36.14. Now, to put this into perspective, with a 4.5% move in the DAX equivalent, if we're looking at something similar in the Euro stocks, we're probably going to be opening in the region of about 35.50 to 55, somewhere in that region, which will basically, if we open up in this region, we're going to be opening up with a fundamental gap now to the downside, leaving this little region up here, quite vulnerable. Whoever's long and aggressively long in this region is going to have to cover. So, if we take a look now, obviously opening up in this region, we're going to expect the first logical move that we're going to expect on the open. I think between 7 and 8 o'clock is where we're going to see a lot of flow. Between 7 and 8 o'clock, I think the futures hedgers are going to come into the market. Whoever's long is probably going to be aggressively getting out. So I am expecting on the open, for us, wherever we are opening, granted, if the S&P does sell off significantly tonight, we could open even lower than this. But wherever, if we open up in these regions, I think the open, we could get a quite significant sell-off. Now, whether that sell-off does continue, I don't really think, from my experience at least, I've seen on the day we get news, you usually don't see the sell-off happen and be sustained. So my point is, for example, when we had the Cyprus bail-in um, situation over the weekend, it had come out, and we came in on Monday, and Bunds had gapped up. I can't remember, about a point. Eurostock stacks were down quite a lot, and they were gapping down. The first initial move in the equity markets was lower, and sharply lower. But effectively, we had made our lows in the morning and then just dribbled higher the rest of the day. So I'm not particularly looking for a monster sell-off, on Monday. It could happen, but I think there could be a chance Monday morning where we get the initial sell-off, then we get some sort of um, finding of equilibrium. If everything opens up so out of value, everything's just wanging around, the market needs to kind of calm down and find an equilibrium before it figures out, how it wants to discover where the fair value is. In order for it to go into price discovery mode, I think the market almost needs to kind of find its bearings, consolidate a bit, and then start correcting, for example. And the way we're looking at the structure, obviously, we've had this pretty big flag. We failed to close above that. So I think effectively looking at the week ahead, now maybe Monday might not be the day, but Tuesday, Wednesday, Thursday, I think if we're continuing to see this risk aversion and we're continuing to see this risk build that we're getting a Grexit, I think it's fair to say that we're going to fill this gap. Number one, we're probably going to fill all the way down to this closing gap, which comes in at 34.51. So I think these levels, these areas, are going to be quite crucial to look at. And I think through them we probably would see some pretty decent flows. So it's just something to be aware of. Now technically, if we failed here and we're moving through this and we are closing these gaps, I think it's also fair to say if the flows continue and the risk aversion continues, that we could see us testing the other side of this trend line support quite a bit lower. Now, um, you know, this is all, I mean, the way I'm doing this analysis right now, obviously, I'm looking at a scenario. There could be a scenario where the market doesn't actually sell off. You also have to be aware that if we don't close this gap, and for whatever reason, let's say we gap down Monday morning, we can't really find an offer, you know, we're actually starting to find a bit of a bid. Let's say we start getting some sort of speculation the ECB might be doing more QE or whatever the story may be. Something completely counterintuitive. Don't marry yourself to an idea, because if we don't fill in these gaps, if we don't make our way lower, and we come back and re-enter last week's value, that could be, whoever has been shorting aggressively is going to get stopped quickly. Um, you know, and this is a very small probability in my eyes, but I think it's a scenario we should also be having in mind. Now let's look at the market structure and the market profile, just to take a look at what our really key areas are. Now obviously, like I said, technicals are going to take the back step when you're seeing fundamentally driven markets. But nevertheless, I think it's important to go through at least the key auctioning value area highs and lows, just to see where the market could interact and find a bit of support slash resistance. I'm not sticking to any specific levels, but I think areas are going to be quite important. Now, the very first level, if we're opening in this region, I said between 35.50s to 35.60s, which we could even open a lot lower. But let's just say, for the sake of the argument, we're all opening in this region, the 50% of last week. And we do have that initial blip lower, and this is obviously a very hypothetical. And then we do start making our way higher. Now, if we do make our way higher from the open, I think the first initial area to be looking at for some resistance is between these 35.80s and 35.84s. Now, looking at these 35.80s, you might be saying, it doesn't look like there's any particular reason why I should be looking at these 35.80s. These 35.84s, 85s look very good because we've got a high of the week at 85s. And 84s, we've got a value area low of the week. But mind you, on 35.80s on Friday, when everyone was selling in this region on Friday morning, and we made this ridiculous ledge. This ledge right here, you can see about 3-4 TPOs, was actually made on Friday. So when everyone was selling into this area, there was a massive buyer at 35.80s and 81s that kept absorbing of the market and basically drove the market higher from there, where we closed at 36.18. So for me, if that buyer, including all the rest of the buyers that are quite aggressive, get a chance to get out anywhere near where they were buying, i.e. these 35.80s to 84.85s, this area I think is going to be quite crucial because he was very aggressive. He sat on the bid. I mean, when I say aggressive, he was passive on the bids, but then again, he had a lot of size. I mean, he absorbed a lot of selling before the market was driven higher. So a first test of this area I think is going to be really crucial. And if we're finding a really big seller come into the market or player come into the market here, I think that could drive us quite a bit lower from there. So I think look out, first initial area to be looking out is 35.80s. And then, coming back, and if we do somehow hold within last week's value area, I think the key areas to be looking at is the closing gap, 36.18, and then the VPOC of the week at 36.24. The value area highs of last week. Again, this is a stretch, but then again, just keep these levels in mind. 36.36, and the high of last week, 36.51. Now to the downside, we're seeing 35.35s as a weekly high. I think this little area where we had this selling tail flip reverse into a buying tail of last week. So between 35.26 and 35.06 is our buying tail of last week. And we basically flip reverse from this area. So I think this little area in here, just initially, if we do get in here from, starting from up here, let's say if we do find our way opening in somewhere in this region and we blip down and test in this region, I wouldn't be surprised if we did find a bit of a bid in here in this region, just because we have that juxtaposition of selling tails and buying tails in this region. Now through that region we obviously have the closing gap between 35.06 and I think that comes in at 34.96 is our closing gap. The value area high of that week actually comes in at 34.92. Now, the value I have here, 34.92, it varies a little bit to the one I have on CQG. In fact, it varies a lot. The one I have on Market Delta comes in lower, I think around 34.74 if I'm not mistaken. I have to double check that because I'm not at my office at the minute. But keep an eye on that little region in there. Obviously, if we get back into that week's value area, we're probably looking at testing the other side of that, which comes in at 34.32, which in that scenario, we would also have closed our closing gap at 34.51. Now, don't mind these end prints here. They're random. For some reason, my CQG's pushed over these prints from this week into this week. So bit strange, but in any case, the closing gap comes in at 34.51, and that is the major closing gap between here and here. Now through that, we're looking at the potential of we see a bit of support coming in. When I say support, I mean a low volume node support coming in around these 34.18s. We've got this low volume node and slightly lower TPO count in there, so look out for that area. And obviously the buying tail and low of that area of that week is 33.73, and then just below that 33.68. So just bear in mind these are the key areas that we're looking at. Obviously, if we don't manage to get back into this value area this week, close this price gap, but don't get anywhere near this closing gap, and then make our way, rally back up into this area. That could be telling you a little bit about the market structure and the market sentiment. I'd assume if we get down here and close this gap and then can't get back into this value area, that could be a bit of an indication. Obviously, we could get that indication a lot sooner if we're not being able to get back into this area or even attack this gap and then start trading back into this value area. That would be a huge bullish indication. And in fact, I'd take all shorts with a pinch of salt and be really, really careful. because like we saw last week, the market price action was extremely bullish. Um, but nonetheless, we are expecting some risk aver not some, but a lot of risk aversion. So, be mindful, be careful. Um, we're looking at a possible accident in the making. It's one thing to be part of the accident. It's another thing to actually actively partake in the accident. So just be careful trading it. You don't have to increase your size. I'd actually highly advise decreasing your size when you're trading these markets because they're going to be very whippy and they're going to be very volatile. Looking at the bunds. Now the bunds last week. Let's first look at the. Let's look really quickly at the 60-minute chart. And if we're looking at the 60-minute chart, we can see last week we opened up in this region here, around 51.75, I believe, 74. Yeah, 75. We opened up, sold off quite aggressively on those expectations of some sort of deal. And the really key areas that we were speaking about was those 150-145s, which was a previous weekly VPOC, and I'll go through that with you guys in just a sec on the market profile. But I'm going to show you guys on here what it looks like. We saw that previous weekly VPOC, that 150-145s. So long as we held below it, the market was seemingly bearish. And then we had that other previous weekly VPOC at 150.45.46, another point to the downside, which we managed to close above on this day, held, tested to the upside, couldn't hold or close above these 45s, and then retested lower. We overall had a pretty decent down week, obviously, once we broke this bit of a wedge formation on Friday. We saw the bunds sharply sell off and close below these 150.45s again. But I firmly expect coming into Monday, these bunds are going to be opening up a hell of a lot higher. Now, I have no bearing there's no way in knowing how far higher they're going to open. They could open anywhere between 30, 50, or 60 ticks. I mean, it couldn't even be a point or more. You have no bearing on how much, how far this can really open, and it's going to be largely dependent on how the T-notes trade overnight. But I'd suggest if we're opening anywhere just above these 45s, which I think would be a very small move, I'd still be willing to buy, quite a bit on the open. Obviously, if we're opening all the way out, on the top of this range, around above these 150-145s, I think the first initial reaction we're going to get is just stops. We're probably going to see quite a few stops through this area. So just be wary when we open. If we're opening a hell of a lot higher, we could see a big stop run. But just be careful because effectively when we get really big stop runs on the 7 to 8 session, the initial balance, sometimes we get a bit of mean reversion back in for the rest of the day, like I was saying before. So just be careful and be wary of that. You want to find, wait for that market. Once it's, if it's blipped, if we get the scenario where we blip 7 to 8 and we start steadily selling off, don't keep buying it and do your ass, because you can effectively do your ass, even though you're saying, what are these bunds doing? Why aren't they going higher? They should be going higher. When we're just steadily kind of coming off, wait for that market to make its bottom, make some sort of structure, something that you can lean on, and then when that structure builds and we break that structure to the upside, then go with that flow, because that'll be your edge. So just be aware of that. I'm just pointing that little scenario, and these are the key little areas that we're looking at. Obviously, the big closing gap that we have from these 75s up until these, from these 79s up until these 18s. The 18 is the closing gap, and that level of resistance at 21, just above that. And obviously that recent high comes in at 151, 152.47. Let's take a quick look at the market profile just for you guys really quickly. We're running way past what we're usually doing, but obviously a lot of things to go through, so I'm going to try and run through this fairly quickly, and then we can go through some of the other data points and events of the week. So if we take a look, We closed quite a bit lower. We closed at 150.07, um, and by all accounts, we could be opening. Basically, we could be opening back into last week's value area. There's a high possibility of that. So the areas to be looking at: last week's value area low is 150.54. Last week's VPOC is 150.70. So looking at this VPOC, obviously the difference between 150.70 and let's say, this level, whatever that level is, 150.80s is not too big. So there's quite a few levels that could be the VPOC. Not a very big standout VPOC, but nonetheless, that is the VPOC of the week. So keep an eye on that. I think that is going to be a bit of a decision point as to where we're going to, head. But then again, mind you, once we are back into this value area and we're holding in this value area, the higher probability is if we can hold above this VPOC, we're going to test this really crucial value area cross. Now we have 1 week value area here, one weekly value area here coming 151.23, another weekly value area high at 151.26. Then we have a value area high of last week at 151.32, and then the previous week before that, the value area low of that week is 151.34. So this whole region in here is going to be mega important, just from an auctioning perspective. Now I'm not looking specifically at any really key level in this, but I think this whole area from an auctioning perspective is going to speak volumes, pardon the pun. But if we do actually get a bid, and if we're trading up in this region, if we're holding below this area and we can't for some reason hold a bid above this, which I think is quite unlikely given the recent uncertainty, then I think we could expect a rotation back lower to trade within this value area. Now if we're holding above this, I think the very high probability is, and I mean when we're holding above this, we must also, the main level is this VPOC here, 150.144. Obviously, if we're holding above this, we're probably going to be attacking this, but if we're holding above the 150.144s, that's your big indication that we're probably going to, outdo all of this selling tail and effectively, more than likely, fill in this gap at 152.18s. So looking at that 152.18s for that fill, and the high of this week at 152.47. Looking a little higher than that, we've got a single print fill at 152.56. And then higher than that, I'm not going to be going through at the minute, because I think we're probably going to have a lot more to say in our daily morning technical briefs with Simon, Dan, and possibly Lee Gibbs and Sojan. So just keep an eye on those guys for some of the technical levels. I'm not going to go through 2-3 points worth of levels with you guys now, because I frankly just don't have the time. Alright, so we've gone through some of those things. Let's take a really quick look back at this quick presentation so we can go through the rest of the week. I'm going to go through this really quickly, just to wrap this up. So on Monday, we've got German CPIs. Those are preliminary numbers. Look out for that. Obviously, we've seen some decent market moves on those in the recent months. It's all these data points, like I've said before, going to take the back burner, but nonetheless, it's good to be looking at this, because if we're seeing, let's say, a massive trend up in the Bunds with a lot of volume, and then the German CPIs come in, a percentage point higher, we see a bit of a sell-off in the Bunds. That could be an entry point, for example. So just be wary of them, because it's going to, it's going to give you more opportunities to trade with, or with the flow, or trade around certain auctioning areas. We also have the Eurozone consumer confidence, U.S. pending home sales, and then from a central bank policy perspective, we've got the ECB's Novotny, a leaning hawk. Looking out from a geopolitical standpoint, we're looking at the EU's Tusk and Juncker. Any potential comments that we get there, and then I think the bigger one being Angela Merkel. She's speaking a couple of times on Monday. So even though that has nothing to do with the EU or Greece, a lot of these events probably to do with something else. There's going to be reporters there. There's going to be people asking them questions. They're probably going to comment. So listen in to see if they say anything. I think obviously if Merkel or someone from, I think Merkel's probably at the end of the day the most powerful person um, in Europe with regards to these things. If she says that they're going to fold, that's where you could get a decent market move. So look out for any comments from her. Come Tuesday, we've got German unemployment change. We've got the UK GDP, which is the final reading. The European CPI estimates, which are usually after the day after the German one. US Chicago PMI and US consumer confidence, which is quite important. Look at the US consumer confidence because the consumer is the most important aspect in the US economy. From a central bank policy perspective, we've got the Australian's RBA speaker Stevens giving a speech, and then the Fed's Bullard, non-voter and leaning hawk. Again, we have the EU's Juncker speaking on Tuesday, so look out for any comments from him. And then obviously we have the month ends, so month-end extensions for the bonds. Look at your extensions sent to you guys. Usually we get it from Barcap or Citi. Take a look. We're probably going to be posting that up on Twitter for you guys, so if you guys want to follow me at MVS_FuteX Live, I'll probably post something up this week, or probably Imran might as well. Look at the extensions, see how that's going to affect the curve. Either way, I think we're probably going to see a pretty sharp rally in the bunds anyway. So just mind you, if we're seeing a massive rally in the bunds come month ends, could it be a case where we get a little bit of covering, just as if you're a big fund manager and you do want to perhaps sell bunds, and you're getting a lot of liquidity on month ends after a massive rally, maybe it might be a good time to sell. Be wary of that. Be careful. And obviously we've got the month ends MOCs for your Euro stocks and predominantly the S&P. We'll probably go through some of those templates on our streams. On Wednesday, we've got the Chinese non-manufacturing PMI and the HSBC manufacturing PMI. That's a final reading. Eurozone manufacturing PMI, UK PMI manufacturing. With the US ADP employment, the precursor to our NFPs. The US manufacturing PMI final, not great market mover, but putting it in anyway. And then the US ISM manufacturing just before the US DOE crude oil inventories. We also have the Riksbank Executive Board meeting just on Wednesday, so take a look at that if you are trading any of the Swedish currencies. And then from the geopolitical perspective, again, we've got the German Finman Schobel speaking, so keep an eye on him to see if he has any big comments. Thursday is basically the final trading day of the week, because Friday we've got the US Independence Day, so nothing going on Friday. I'm not coming to work. In fact, Futex is going to be going out to have a bit of a field day, playing some football and having a few beers. So no one's trading on Friday. But Thursday we do have the U.S. non-farm payrolls, U.S. unemployment, and the average hourly earnings. Keep an eye on these figures, guys, because even though we have seen fairly dovish thoughts from the Fed, they have said we're basically looking at a rate rise in either September or December. Much better figures on this, with especially if we get higher average hourly earnings. That could basically push the risk of a rate hike from 50-50 in September to maybe 80-20 in September or something, or 70-30 in September. Just be mindful. Data is just getting increasingly important for the Fed at the minute. Right. From a risk and money management perspective, I think this week is going to be really important. No doubt we're going to see a volatile week. No doubt we're going to see thin markets, and we're going to see a lot of risky environments. I'd say for anyone that's trading that's sort of amateur, doesn't have much experience, I'd say the best thing for you guys to do is probably sit back and observe more than anything. I do think trading is going to be a good experience, but if you're going to do so, probably do it with very little size. Again, I reiterate, you probably should be just sitting back and observing, and then if you see an opportunity, get involved. Um, but it's no, it doesn't make any sense if you haven't experienced this kind of market condition to bet the farm or bet the house on one day or 1 week. Like I said, there's going to be opportunities. There's going to be, you know, this is going to be going on for the next weeks and months ahead. So the way I see it, come Monday, we're going to see the initial market reaction to this Greek referendum. Um, well, usually I'll put a higher weekly risk allocation on Monday. I'm actually putting, what are the least risk allocations on Monday because I feel usually the first days, when we get the news, they can be really difficult to trade um, because it's going to be really, really volatile. Not saying you can't make very good money, but you've got to be very, very careful, and especially because you've had that two-day gap on the weekend. You're not fresh. You haven't just been trading the price action. It's you have to be ready for it. When you wake, literally, when the market opens at 7 o'clock, it's going to be mayhem. There's going to be a lot of volatility. There's going to be a lot going on. You have to be in tune, focused, and in the game. You know, and I think the majority of us aren't in the game at 7 a.m. Monday after a weekend in the sun, having beers all day. Just be careful. I'm putting 20% because just out of self-awareness, I know myself. I think it's probably not the best day to put all your risk, all your chips on the table. And usually, I think the trends do usually pick up the second and third days. So I'm putting a little bit more risk allocation on Tuesday. Obviously, we also have month ends. And then Wednesday, 20% like Monday, before Thursday, which is non-farm payrolls, which I think, obviously, you know, Thursday's pretty much the last day people will be able to trade. We're going to have non-farm payrolls, which is pretty volatile, and the referendum on the weekend. So I think everything's really going to come to the head towards the end of the week as well. So be mindful. That's pretty much my weekly roadmap. It's the biggest roadmap I've done so far. I think majority of it was around Greece, but like I said, Greece is going to dominate the headlines this week, dominate the flows this week. So um, be mindful, trade professionally, stay passionate, you know, be focused and stay at your desk the whole time. It's going to be a lot of fun times. It's not the time to be, a cowboy. Don't put your cowboy hat now on. Get your thinking cap on. Be professional. Stay at your desk and trade. Um, you know, with integrity and dignity. Don't lose your shit on a week like this because it can cost you a lot of money. There's going to be loads of opportunities and they're going to keep coming, but be mindful. All right. Well, thanks a lot, guys, for listening. Hope we have a lot of fun. We'll be speaking at the end of the week where I do my weekly market wrap. All right. Take care, guys, and bye bye for now.